Let's bring in our next guest. Deputy Treasury Secretary Wally Adeyemo joins us now. It's so great to have you on the program. Welcome.
Well, thanks for having me. It's great to be here.
So we did have this hot jobs report. It actually triggered a sell-off in treasuries today with a 10-year yield back above 4%. Many more jobs added than expected, a jump in wage growth as well. Why is this good news at a time when the Fed is still fighting inflation?
It's the most important thing for us is to look at trend lines and not to look at any individual jobs report. And what we've seen is that over the last 3 months, we've seen more than 250,000 jobs created each month. But one of the things that's also important is when you look at supply, and the supply of labor has improved. Since 2021, you've seen 2% improvement in labor force participation amongst prime age workers. And that's why we've been able to see an economy where we're creating more jobs, the economy continues to grow, and over the last 6 months, inflation's been down at 2%.
Yeah, and we did see the strong headline numbers, but lies some softening in the report, arguably, specifically hours worked. We've seen some other mixed macro data as well, and then, of course, concerns just this week about the state of the regional banks, given the New York Community Bank earnings report that sparked a sell-off. I wonder how you would assess that trajectory of economic growth this year, and perhaps just as importantly, until the Fed begins cutting rates, whenever that happens in this cycle, what it means to have rates higher for longer for the banking system.
The way I would evaluate the U.S. economy is that it remains the strongest in the world. Just a week ago, I was traveling to Germany, to Italy, and to Japan, and having a chance to meet with our closest allies in some of the world's biggest economies. And without a doubt, the U.S. economy is the strongest. We have the strongest growth. We're seeing inflation come down quickly. We're creating jobs, and we have a great deal of momentum. We, of course, face headwinds, many of them from abroad, but because of the policy choices we've made and the things that the businesses and the CEOs who watch your show have done, our companies are better prepared for that than companies anywhere in the world, and our markets are demonstrating that. You look at records highs in terms of profits and our stock markets, and it reflects an economy that's strong and will remain strong for 2024.
Wally, strong jobs report, stocks are higher, markets up, but why does it still feel like it's so tough for the working class? When I look through my social feed, I'm on Facebook because, you know, I'm middle-aged. They're talking about the hike in insurance rates that they're getting. Everybody's getting notices of these days. They're not cheering a strong jobs report.
So I think one of the things we always have to remind ourselves is that we're coming out of an incredibly tough period with the pandemic and Russia's invasion of Ukraine, which drove gas prices higher. But today, gas prices are $1.90 lower than they were at the peak because of things like the president's decision to release oil from the Strategic Petroleum Reserve. And ultimately, the thing that we've done, the thing the president's been focused on, is making progress for the American people so that over time we continue to see the economy improve and lives improve for Americans. And today, if you own a house, your house is worth more than it was before the pandemic. If you are a senior who's going out to buy insulin for your diabetes, you're going to pay $35 versus what you paid before the passage of the legislation the president advocated for. We're going to continue making that progress over time, and we know that in America, because of the hard work of the American people and companies, we're going to be better positioned to make that progress. One of the stats that I think is the most important is when you look at small business starts. Over the course of the last 3 years, 16 million Americans have made the decision to start small businesses, to take that risk because they see opportunity in America. And our goal is going to be to make sure that we provide them with the economic momentum that will allow those small businesses to eventually become the big businesses we're talking about in the stock market.
Yeah, you mentioned small businesses, and we actually got some data from Intuit. Monthly they come out with info on the smallest businesses. It turns out those with fewer than 9 employees actually cut in the last month, employees over the last month. So it's interesting. There's this disconnect, it seems, between what's happening with the big and the rich, the Metas of the world, and then the mom and pops, yes?
So I would say that what we're seeing is that more than in any period, there's being investments made in those mom and pop small businesses. And I think what I would say is that you look at the momentum for small businesses, and we've created more of those 1 to 9 person small businesses over the last 3 years than any point in history. You're right that one of the things we have to focus on is making sure that they have the opportunities to grow. And that's why the president's been focused on doing things like providing additional capital to those businesses through a program that we call this State Small Business Credit Initiative and through this CDFIs. And fundamentally, by providing that credit, we're going to put them in a better position to get access to the loans they need to grow. But every small business I talk to, the second thing they tell me is they need customers. And we're focused in the federal government of being a customer to more small businesses than any time in history, and calling on big businesses to do that as well, because for every bank out there, every big business, ultimately they need a number of small businesses to be a part of that supply chain. And we're encouraged by the fact that more Americans over the last 3 years have decided to start small businesses than any point in history, and we want to make sure that we support that ecosystem going forward.
Yeah, I do want to shift gears a little bit. More sanctions on Iran announced today at a time when the Mideast tensions are flaring. You've got Iranian hacks, you've got Houthi attacks on ships, you've got militants that are backed by Iran carrying out a drone strike in Jordan that killed Americans last weekend. What does sanctions enable, and how effective will they actually be?
So I think you're talking about one of the headwinds that I mentioned earlier that is a real headwind for the global economy. But because of the efforts that we've put in terms of policy, but what our businesses are doing, what the American people are doing, our economy is better able to withstand those headwinds. But in addition to that, we're taking actions to hold Iran and their proxies accountable by putting in place sanctions. And fundamentally what these sanctions do is they cut them off from access to the thing they need, which is money to buy the weapons that they're using to come after our interest and to put our national security at risk. And our message clearly to those who seek to do that is that we're going to continue to act, and we're not going to act alone. One of the things that I've talked to our allies and partners about, and the Secretary and President have been focused on, is making sure that we act with our allies and partners in the region, but around the world, to hold those actors accountable. And we're going to continue to do that in order to make sure they have less access to money to cause the damage to those in the region and to our interest and to our partners' interests as well.